Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we're starting the day off with a fairly mixed global cues. The headline continues to be the US-Vietnam trade deal. So one deal down, Vietnam has agreed for about 20% tariffs, down from their earlier 46% blanket tariffs. And even their transshipment goods are expected to attract about 40% tariffs. Now, these transship goods actually mean that any goods that do not originate in Vietnam but is shipping using that route, that is expected to attract about the 40% tariffs that I mentioned earlier. Now, basically, these transshipment tariffs are also aimed to address much of the claims that China uses the Vietnamese route to ship their goods. So, but yes, one deal down on the tariff front. What India stands to agree and the broader contours of the range of the trade agreement is something that we'll be closely watching out right now. All the trade negotiators have been debating in the Washington, and so we'll be watching out on any developments coming on that tariff front too. But coming to how the markets across the globe took the US-Vietnam trade deal, US markets were mixed overnight, but we did see that the S&P 500 and the NASDAQ did clinch a record high. So positive on that note. Asia markets, however, they were mixed this morning because traders were navigating more details on the agreement which was reached between US and Vietnam. Now, other than that, how the three factors, oil, gold and dollar index have behaved. Oil prices jumped about 3% because we did see that Iran suspended the cooperation with the UN nuclear watchdog. Basically, they have accused that IEA of siding with the Western countries and has now said that any inspection of the nuclear sites would need approval by the Tehran Supreme National Security Council. So yes, oil prices and commodities reacting well to that Iran suspension of any of the inspection checks which is being done by the UN nuclear watchdog. On the other hand, we saw gold prices firm up. Weak US private payrolls data did fuel some rate cut bets, and so we saw that the gold prices have firmed up, and dollar also retreated from the lows to hover around that 97 odd levels. So yes, plenty of cues that we have received today. How the Indian markets will digest all of this is all what we will check with our experts of the show. We also have some stocks in focus that we will address. For instance, your textile and apparel stocks is something we'll watch out amid the Vietnamese trade deal. Then we have the QIP of Shakti Pumps. All of that we will be addressing later in the segment. Now, before we delve deeper into the show, let's quickly take a start and look at the top headlines this hour. Wall Street ends mixed as Dow Jones slips, while S&P 500 and NASDAQ ended record highs, followed by the US-Vietnam trade deal and ADP jobs report. The 10-year Treasury yields jumps to highest level in about a week. Asian markets mixed as investors looked for more details on US-Vietnam trade deal. Meanwhile, the GIFT Nifty is indicating a slightly positive start for Indian markets. Crude prices jumped 3% as Iran suspends cooperation with UN nuclear watchdog, and after the US-Vietnam trade deal was signed, gold prices meanwhile were firm as weak private payrolls data strengthened the rate cut bet. US President Donald Trump announces trade agreement with Vietnam. The agreement spells 20% tariffs for Vietnam as well as 40% transshipping tariffs. And the Ministry of Petroleum and Natural Gas has raised an objection to Vidanta's demerger during the hearing of NCLT. The legal representative from the ministry requested additional time to present their observation before the next hearing on August 20. All right, like we were talking about yesterday, Nifty did fail to defend that 25,500 odd levels and slipped below those marks. It even broke below that 25,400 mark yesterday, but did settle above that levels during the end of the session. But yes, so what contributed to the losses? That was your financial stocks. Bank Nifty index definitely closed in the red. And if you look at the broader end of the markets, mid-cap and small-cap indices failed to keep up its resilience and saw some profit booking in yesterday's session. Mid-cap index particularly, that snapped about 8-day winning streak, and small caps extended the loss to about second consecutive day as well. Among sectoral indices, if we see, Nifty Metal Index, that gained the most. However, Nifty Realty, that was down for about 5th straight session as well. On the other hand, the PSU banks, which were doing quite well from the past 6 days, also fizzled out rally, and we did see some of the PSU banks also taking a backseat in yesterday's trading session. But coming to the fund flows data, yesterday we did see FII sell stocks which was worth about 1562 crore rupees in the cash markets. On the other hand, DIIs bought about stocks which was worth about 3037 crore rupees in the cash markets. Of course, we did see some stellar listings yesterday also, and of course, one of the big listing of HDB Financial Services with about 12% premium, and it did end with about 13% gains. We'll watch out for that stock in today's trading session too. Apart from that, option queues data, Nifty put call ratio slipping to about 0.78 levels from 0.88 levels in the previous session. And among the F&O ban, RBL Bank continues to be a part of the F&O ban list. Now, just 3-4 minutes to go before we go to the open, but let's quickly get on board with our technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. He'll take us through how the Nifty is expected to behave today. Chandan, yesterday we did fail to defend that 25,500 and even broke below that 25,400. So, what is the next support that we can watch out for?
Good morning, Lovisha. Thanks for having me. So we witnessed a consolidating move in last 3 trading sessions where Nifty witnessed a corrective stance, but major trend of the market is positive, and I believe till it holds above 25,250, any decline could be bought. So for immediate point of view, I believe 25,400, and for 2 days point of view, 25,250 could act as a major support. If for the day, if Nifty manages to hold about 25,500, then some recovery could be seen towards 25,650 mark. So we have to play the range between 25,250 to 25,650, and hold of 25,500 for day will be slightly positive in the Nifty being the weekly expiry.
Okay, all right. What about for the Bank Nifty Index, Chandan? Because that also ended in the red. Financial stocks took a backseat. PSU banks especially also snapped out its 6-day rally.
Yeah, so Bank Nifty formed a bearish candle on the daily chart. However, major trend is positive, but it took hurdle at the upper band of the supply trend line. And because of that, some profit booking was seen on the last trading session as it corrected by around 600, 800 points from higher levels. But we need to keep in mind that major trend is positive, and 56,500 could act as a major support. So on decline till it holds above 56,500, we have to look for positive to range bound bias. With support of 56,500, it can attempt for a bounce towards 57,500 marks in Bank Nifty Index.
Okay, all right. Chandan, what about the mid-cap and small caps? Because they continue to see pressure. Can we expect an extension of the same going ahead in the trading session too?
So if I look at the chart wise, most of the counters witness profit booking, bearing selective defense and defensive name. But I believe if broader market recovers, then again momentum could be there in the mid and small cap items. One need to keep in mind that seasonality flavors works well for Indian market, and for most part of the July, most of the counters are likely to do that is the history of last 10 years. So expecting positive stance in most of the mid cap, small cap, and the broader market.
Okay, all right. Mid-cap and strength from the broader markets. But yes, the first rates coming on your screen, we have opened in the positive territory. 25,496 levels, we're slowly treading towards that 25,500 mark, but yes, not still above it. Scientix is also up about 200 points given the mixed global cues that we have started with. US-Vietnam trade deal has been signed, one of the important cues to watch out for in today's trading session. But yes, 25,499, that is where we are at this point of time. 25,500. Finally, we have clinched, we have reclaimed those levels at this point of time. But yes, so whether or not this sustains throughout the day is something that we will be watching out for. Let's take a look at some of the sectoral indices. Auto index doing well with about 0.2% gains that is coming in. Definitely coming on the back of the auto sales data. We did see 2 days earlier where the two-wheelers have definitely performed better than how the passenger vehicles have behaved. On the other hand, if you look at some of the other sectoral indices, PSU banks doing well with the Nifty PSU bank up about 0.3% at this point of time. Nifty IT index with about 0.4%. Very mild gains that is coming in from the sectoral indices perspective. But yes, India Wix, that continues to remain at depressed levels, about 12 odd levels, which continues to show that there could be a little bit of a bullish sentiment that is prevailing in the markets at this point of time. Let's take a look at how the small cap and mid caps have been doing, because that fizzled out rally in yesterday's trading session, particularly for the mid cap index, that is gaining with about 0.3%, outperforming the benchmark indices at this point of time. Small caps with about 0.3% also. If you look at other indices, Bank Nifty has opened mildly in the green at this point, and of course, if you look at Nifty Metal index with about 0.5% gain, 0.5% gains coming in for the metal index. It was one of the top sectoral performers yesterday also, and today also it seems to be doing quite well. But let's take a look at some of the top gainers and losers on the Nifty 50. Asian Paints extending its run up to the second consecutive day. We did see about the CCI probe of anti-competitive behavior on the company, but the stock has brushed aside any of the negative news, and the stock seems to be doing quite well. Shriram Finance, Tata Steel, all of them doing well. Steel stocks once again, continue to remain the market favor. Bharti Airtel, ICICI Bank also with a gain of about nearly 0.5% or so. On the other hand, if you look at the losing end, Reliance Industries, the heavyweight, seeing a loss of about 0.3%. Kotak Mahindra Bank with about 1% loss. Grasim, Titan and Bajaj Twins seem to be not doing well at this point of time. But yes, Nifty Auto Index, that continues to do well with about 0.3%. We did see that the two-wheelers have outperformed the passenger vehicles, and of course the tractor segment also did quite well. But Chandan, anything you're watching out from the Nifty Auto Index at this point of time?
So to comment on Nifty Auto, selective stocks are doing well. In fact, the consolidative move of last 3 days is getting over. In fact, on the weekly chart, Nifty Auto Index is on the verge of breakout from a bullish pole and flag pattern, which has positive implications. So TVS Motor is on radar. TVS Motor has seen a consolidative move of last 5 trading sessions, took support at 2880. So I believe with support of 2880, one can look for an upside target towards 3000 in TVS Motor. Apart from that, Maruti, one need to keep in mind, it has bottomed out with support of 12,300. It can witness a recovery towards 13,000 marks. So counter like TVS Motor and Maruti could be on radar, and I believe a small follow-up in Nifty Auto could drive the next leg of rally. One should not forget M&M. After the lower top, lower bottom of last 4-5 days, now we are getting some stability with support of 3150. It can head towards 3250 kind of level. So I believe all these 3-4 counters are on radar, and Nifty Auto could be on buzz during the day.
Okay, all right. Let's take another stock in focus, because it did come out with its first quarter update. That is your Avenue Supermarts, that is your DMart, that did come out with its quarterly update yesterday. We did see that the company report about 16% year-on-year increase in the total revenue, and the first quarter of FY26 saw about 6 new store additions for the company, which included a key opening in Agra, marking the company's first major expansion in the state in Ghaziabad. Now, let's take some of the brokerage reactions. However, they were quite underwhelming, and that is why we are seeing a 3% cut on the counter as well. Morgan Stanley has given out an underweight call because they believe that the company's growth in the first quarter of FY26 was lower than what was seen in the last year as well. And they also believe that for Q1, the total store count implied SSG for the quarter remains to be at 3 to 4%. On the other hand, Macquarie was also quite conservative on the counter because they gave out a underweight call, and they believe that the company has seen a marginal miss on the sales growth. So yes, DMart not doing well in today's trading session. But however, if you look at from the March close, the stock has done well with about 27% uptick. Chandan, anything that you're watching out from the counter going ahead near term? Can we see some pressure?
So like DMart has seen a positive price pattern. However, in last 2 trading sessions, it witnessed a corrective move from 4,500 to 42.35. But overall bias is positive. I think let it cool down to find support near 41.50 to 41.80. That zone can provide again buying interest or bargain buying to the counter for next leg of rally towards 4,500.
Okay, all right. Let's take another stock in focus. We have Coromandel International and of course NACL Industries also. We did see yesterday that the CCI has approved Coromandel's 820 crore rupees acquisition of 53% stake in the company, which is a listed agrochemical firm. And the deal also includes the promoter and public shareholder transactions and aligns with Coromandel's strategy to expand in the crop protection and contract manufacturing. We did see in yesterday's trading session that NACL Industries, it had hit a 5% upper circuit. The stock seems to be doing well again, once again a 5% upper circuit in today's trading session. Coromandel International also with about 3% uptick. Both of these counters, how are you watching out for, Chandan?
So yes, talking about Coromandel, we have seen support-based buying in the counter at lower zone. However, last 4 days were quite volatile in between 2200 to 2550. It witnessed recovery, again fell down. So I believe the broader trading range is likely to play an important role. So 2200 to 2500 is the trading range, and I believe it would be very tough for trader to play this range. Let the counter settle before getting an opportunity in the trading setup.
Okay, all right. Let's take another stock. Let's take some of the viewer queries that is dropping on our live feed right now. The first query coming in from Satya is asking, what are the next levels to watch out for Schlafer for the next month? Schlafer, if we look at from the April lows, the stock has done well with about 31% uptick. But from the past 1 month, we're seeing a little bit of a consolidation on the counter. Chandan, how are you watching out on the counter, and what are the next levels that you will suggest for him?
So I think we have seen a volatile swings in the counter. However, the momentum was missing at higher levels. As of now, support is at 3950, upside hurdle is at 4200 marks.
Okay, 4200 marks. Let's take another, counter and of course another viewer query at this point. Satya is also asking the view on Colte Paddle from a 9 to 12 months perspective. The past 1 month, the stock has done quite well, 8% uptick, and if from the past 6 months also, the stock has been on an upward trajectory. Anything that we can watch out for going into the near term, Chandan?
Yeah, so I believe selective real estate counter were in focus, but again the momentum was missing. Colte Patil has been making a high tops, high bottom on the monthly chart. In last 5 months, it recovered well from 239 to 500 marks. But in last 2 days, some corrective move was visible. But again, buy on decline is intact till it holds above 460. Utilize any decline for a bounce towards 500.
Okay, all right. Let's take another viewer query. Naveen is asking the view on Coforge. Anything that you can watch out for the counter? Past 1 month, the stock has done quite well. Given the sluggishness we have seen in other IT companies. But anything that we need to watch out as we head to the Q1 earnings season, Chandan?
So from last 7 days, this stock is forming a small bodied candle, but overall has seen the up move from 1800 to 1930, 1950 marks. So trend is positive, but momentum is low. I believe one can accumulate on a small decline near 1900 for target towards 2000.
Okay, all right. Let's take another viewer query at this point of time. Nitin is asking the view on Vidanta for a short-term new entry. We did see yesterday that the NCLT has deferred its demerger plans, and they will be hearing the next on August 20. The stock is not doing well in today's trading session, but for the past 1 month, the stock has done well. 8 to 11% returns that has given in. Chandan, anything that we can watch out for the counter for going ahead?
Yeah, so we have slight positive on the Nifty Metal. Nifty Metal can see the positive stance as it has been forming the higher base. So other counter like Hindalco, Tata Steel could be on radar, but Vidanta also forming the higher base. I believe with support of 460, it can head towards 479 to 485 marks.
Okay, all right, 470 to 490 marks for the counter. Let's take one stock in focus, that is your PVR Inox, because yesterday it did announce the plans to add about 200 new screens over the next 2 years with an investment of up to 400 crore rupees. Now the expansion will primarily focus on South India, followed by some smaller cities and towns as well. But Chandan, if you look at the stock, it has seen a sharp decline since December, and today also the stock seems not to be quite enthused by the news development. What does the near term suggest for the counter? Because from 1500 we are down to 950 odd levels.
So from last 15 days, the stock has been consolidating with multiple support at 930, but at the same time hurdles are visible at 980. So 930 to 980 is the probable trading range. We require a decisive range breakout to get any attraction in the counter. So I think we have to just wait and watch for a decisive range breakout from this zone.
Okay, All right, that is the view coming in for PVR Inox. Let's take a viewer query. Pooja Khanna is asking about whether she can buy Adani Power at the current market price and what is the correct level to enter the stock. Any entry levels that you would want to suggest here, Chandan?
Yeah, so Pooja, you need to keep in mind that this is a volatile counter. If I look at the price behavior of last 20 days, it corrected from 610 to 527. But in last 10 days, recovered well from 527 to again back to 610. So volatile nature is likely to be there. But if someone is looking to accumulate 2-3 times, then one can go for this. As of now, if it declines to 575, one can accumulate for an upside target towards 600.
Okay, all right. Let's take another viewer query. Anand Roop is asking the view on HDB Financial Services. Of course, yesterday we did see a good listing, and today also the stock seems to be doing well. Anything do you have any views on the counter, Chandan?
So it just listed, we have the data track history of last 2 days. But yes, if looking at the immediate price pattern, I believe 840 can be utilized as a support. With support of 840, it can head towards 900. So very less data, but looking at the early price setup on the lower time frame, expecting this counter to head to higher levels.
Okay, 900 levels, that is what we are watching out for. Also yesterday we did see a note where the MK has initiated coverage on the counter also. So that is a good development coming in for HDB Financial Services. Let's take another query at this point of time. Shatish is asking the view on L&T and what are the levels that we need to watch out for. The stock has been quite range bound, not really moving anywhere from the past couple of months. But Chandan, anything that you're watching out for?
So if you have to look at the L&T, so the stock got stuck in a range. We have seen recovery from 34.85 to 37.30, but again, we are hovering near 3600 marks. So lackluster move is likely to be there. Support based buying happens, but the follow-up is missing, which fails to cheer the move beyond 3700. So I think just wait and watch. Let the price form a durable price setup for an entry.
Okay, all right. Let's take another viewer query then. Ratna Kumar Solomon is asking the view on Tata Motors. He's asking, he's holding in loss, and if he's asking, if there is any chance of recovery that we can watch out for Tata Motors. The June sales data, Chandan, also that was also quite disappointing. Double-digit fall that came in total sales for the month of June. Any chance of recovery that you're seeing going on from here on?
Yeah, it's very tough to comment on Tata Motors because it has a volatile nature. It formed the bottom near 670, but now hurdles are visible at 700 or 715. So if it moves above 715 or on immediate basis above 700, then only the stability will be there. I'll prefer other auto name like Ashok Leyland or like TVS Motor, M&M Maruti than Tata Motors.
Okay, all right. Let's take another viewer query. Debu K is asking the view on Gravitas India for investment for about 3 months. So far this year, the stock has underperformed with about 14% declines. But anything that you're watching out for, can what are the levels that he's asking for investment for about 3 months?
So it got stuck in a range, but multiple supports are visible near 1650. So buy on decline, or if you are holding, then can continue with your position. With support of 1650, it has potential to swing towards 2150 marks.
Okay, all right. Let's take one stock in focus, that is your Hindustan Zinc, because the company did report its highest ever first quarter mined metal output at about 265 kilotons, which was up about 1% year on year. However, the company did see a production which was dropped to about 15% sequentially due to a routine mine preparation. The stock seems to be holding up well, given that metal stocks have been doing well quite today. Chandan, the stock seems to be, however, directionless past couple of months. Do you expect this trend to remain the same going ahead?
Yeah, it's likely to remain choppy in this broader trading range. In fact, from last 10 days, it got stuck in between 435 to 455. So until it doesn't surpass this trading band, I think it would be tough to catch the swings on either side.
Okay, all right. Let's take another viewer query at this point of time. Mukul Vaidya is asking that he has bought Abbott at the price of 31,700, and this, the stock has seen a good recovery after that. 35,500. That is where it is standing at this point of time. What should he do? Should he book some profits or should he wait and hold on?
I think one can hold here with support of 34,000. It can head towards 37,000 to 39,000. So positive stance on Abbott India.
Okay, all right. Let's take another stock viewer query at this point of time. Manish Verma is asking that is it a good point to invest more in Rainbow Hospital because he's seeing an existing profit of about 35% on the counter. Rainbow Hospital, any thoughts on that, Chandan?
So it witnessed decent recovery from lower levels, but now multiple hurdles are seen near 1600 to 1650. So if it moves above 1600 to 1650, then only the fresh buying interest could be there. But yes, overall setup is positive if someone is looking for positional point of.
All right, let's take another viewer query at this point of time. K Naga is asking that's about Sambh steel tubes. It's a new listing. He's bought it at the price of 99 rupees. He's asking what is the view, and he's asking whether he should hold for about 3 to 6 months. I know it's a new counter, Chandan, but any views you have on the counter?
So like again, the stock has limited price history comparatively. Even on last trading session, it witnessed some corrective move. Today, it witnessed some recovery, but got stuck in a range. Not getting sense, but metal sector looks positive, so one can look at the other metal name.
Okay, all right. Let's take another viewer query. Alex is asking the view on Scientix, and he's asking whether, if there could be any fresh entry for the long term. From January onwards, the stock has been exhibiting a little bit of a negative trend, Chandan. But anything that you can watch out for, especially when it wants to make a fresh entry on the counter?
So it got stuck in a range. Upside is being kept. So I think better to wait and watch.
Okay, better to wait and watch. Let's take another viewer query then. Karthike is asking the view on Narayana Health. After the recent sharp run-up, it has corrected, and he's asking whether it can be accumulated at the current level. Any thoughts, Chandan?
Yeah, so overall positive stance in selective healthcare companies. It really rallied well in last 9 days from 1850 to 2370 marks, but then correction already seen from higher levels. It drifted below 2000. I believe 1850 could provide as a support to again witness a recovery towards 2200.
Okay, all right. Let's take another viewer query. Rakesh is asking the view on SBI because he's holding the stock at about 820 odd levels. It's nearly to where he's been holding at 811. That is where we are at for SBI. Any thoughts on the counter, given the PSU banks did see some rally, and of course the finance minister has also said that a lot of monetization of the subsidiaries of the PSU counters needs to be taken care of. Any thoughts on the counter, Chandan?
So more positive on PNB than SBI, but first let me comment on SBI. It has multiple support near 800, hurdle at 825. So likely to trade in between 800 to 825. But PNB looks quite promising for next leg of rally with support of 109. It can head towards 118 to 120 marks.
Okay, all right. Let's take another viewer query at this point of time. Paddy is asking the view on Sun TV, and he's asking whether we can invest for the long term. Of course, the company did see a lot of clash that in the recent days, and the stock has reacted to that as well. With about the past 1 month, we can see already 7% downtick. Any thoughts on the counter for Sun TV, Chandan?
So no, as of now, I'll avoid. The stock is in bearish mode. It has been making lower top, lower bottom. Multiple supports are visible at 550, but if that is broken, then there will be more concern in the counter. So structure is not positive, and after the market recovery, we have not seen any sort of buying interest or positivity. So till it remains below 600, it can drift down to support the key level of 550.
Okay, all right. All right, just one last question before we let you go, Chandan. What are your buying picks at this hour? Anything that is worth mentioning?
Yeah, so again, volatile cues could be there. Positive on the UPL, selective chemical counter could do well. So one can buy UPL with support of 663 for an upside target towards 700. Positive on selective defense name. So here I want to mention about Paras Defense with support of 1665. Paras can go to 1800 marks. So I believe chemical counter could be in focus. Selective defense name one need to keep in radar, and then cement counter could be on focus.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Chandan. And thank you so much for your time and for joining us.
Thank you.
All right. All right, let's quickly take a check of the markets before we move on to our next guest of the show. The Sensex has cooled off with about, it's down flat in the red, and Nifty has also breached, below that 25,500, 550 levels. 500 levels where it was. Even it's below the 25,450 levels at this point of time. If you look at some of the sectors that has contributed to the loss, that is your Bank Nifty index, because it has slipped into the negative terrain, and of course energy stocks, consumer durable stocks seem not to be doing quite well at this point of time. Nifty Media index also slipped into the negative territory, and if you look at the PSU banks, private banks, all of them seeing a cut of about 0.2% or so. If you look at the broader end of the market, small caps and mid caps is also cooled off, and they are marginally in the green at this point of time. So all in all, we are seeing a little bit of the breadth of the markets slowly moving towards more declines than it was on advance front. But with that, let's quickly move on to our next guest of the show. We have Nirav Karkera, Head of Research of Fisdom, who will be joining us and talking about us. Nirav, good morning. We are down with one deal with US, that is with Vietnam, 20% tariffs on Vietnam while US goes duty free. Does it bring pressure to the negotiators in the Washington for India, given the kind of concessions US has received? And now that we're also, because we're quite hesitant on some politically sensitive topics of dairy and agriculture?
Yeah, Lovisha. So this, of course, comes in as a welcome development for Asian markets. I feel the Vietnamese markets rejoice the move. But however, there is definitely some indication that India needs to be cautious considering this deal as a backdrop. Because it's not just the 20% on Vietnamese imports and how US gets to go in duty free. The imbalance, of course, is stark and warrants a lot of attention. Another thing that is critical about the deal is the 40% duties that is being levied on trans-shipping, which could tweak and have implications on the rule of origin for imports and exports with partner countries. Right, this is where the devil will lie in the details, and nuances will start playing out, which will be more relevant to India when it comes to negotiating a trade deal. As we speak, there are hopes of a favorable trade deal, but there will be, pressure on India to iron out the finer nuances. So this is, of course, a developing story, but we believe that the US-Vietnam deal will, does warrant a case where negotiators on India's behalf goes through the particulars of this deal with a fine comb, and to see what are the other nuances that can be discussed as a part of the negotiation.
Okay. Okay, Nirav, what about from an EN perspective? Does that also make India a less compelling play for the FIIs for the time being?
So India remains resilient, right, even against the backdrop of this deal. So while this is positive for Vietnam, it does not take away much from India, right? Because if you look at the total share of exports made by India versus the ones done by Vietnam, there is a limited overlap in the kind of services and goods that are overlapping. And for the sectors wherein there is an overlap and where India could lose some bit of competitive edge because of this entire US Vietnam deal, the prices have already been baked in. I feel it does not come in as a surprise, or at least not as a huge surprise. So we are not seeing any adverse FPI interest, at least not in any significant quantum going ahead from here, at least on the basis of the newly developed US Vietnam deal.
Okay, okay. What about from a Vietnam perspective, given that it's a major hub for garments and manufacturing, and now with the tariff deal out, though we don't have this product specific tariff details, what do you make sense for the Indian textile sector going ahead?
So this is one of the sectors that I spoke about in an umbrella way. So garments exports is definitely a sector that will witness some stiff competition, right? And again, it is not a very decisive point at this point in time, because FPI portfolio managers would want to see how does the trade deal between India and US also fare before any reallocation or rebalancing decisions are made. So this definitely puts Indian garment exporters in a tight spot, but there is still room to provide for a benefit of doubt till the US India deal comes through.
Okay, all right. Nirav, broader markets that have been faring well from the last 3 months. Mid caps were up 13%, small caps up about 17%. Would you suggest investors to tilt their portfolio more towards the mid cap and small caps away from the large caps as we head towards the earnings season as well?
So, of course, the mid and small cap indices have posted a smart recovery, but I would refrain from giving a blanket call on mid caps or small caps because the rally has been led by a select few. In fact, the sustainability of the rally going ahead is also under question. Of course, there are several pockets of opportunities between mid cap and small cap, but this is not a time where one can clearly change their market cap allocation strategy and tilt away from large cap. Of course, it is a good time to start nibbling on several mid and small cap stocks, but this needs to be in a very selective manner and purely from a bottom up approach. It cannot be handled by simply taking incremental exposure to the baskets in itself. So, a high degree of selectivity and discretion must be exercised to identify specific opportunities within these baskets.
Okay, okay. Nirav, there's the first half of this year, we have been seeing a lot of promoters selling their stakes in the companies, and we're seeing a lot of block deals, which has also been happening. Do you believe that liquidity still remains a key hindrance for the overall equity markets, and do you believe that it could be, snugged out going ahead?
So, of course, promoters have been selling. The data shows that, but there is a sort of relative pressure in terms of liquidity. Again, I use the word relatively with emphasis because it has been a struggle versus let's say a quarter or a couple of quarters back. But in the overall scheme of things, it is not as much a problem. There is enough liquidity and depth to absorb the current state of volumes. So I would not look at this as a negative, at least not from a liquidity perspective.
Okay, okay. All right, we're just, heading towards the Q1 earnings season, Nirav, but any sectors that you believe will lead the Q1 and any sectors that, you believe that, should remain on the sidelines for the time being?
Yeah, so I mean, of course, early time to discuss it, but we see a few sectors, that could really surprise on the upside. So at the top, we see non-lending, financial service organizations doing really well. So that is basically your ex banks, ex NBFCs. We expect that pack to do very well. We are expecting capital market plays to start, posting, much better earnings going forward, at least on a quarter-over-quarter basis. We are expecting significant improvement there. Right, there are a few, specialty chemicals. Not exactly specialty chemicals, but a few in the overall chemical space and agro chemicals and fertilizer space that could post and surprise on the positive side. So these are a few sectors that we expect to surprise on the positive side. Of course, the outlook for the entire basket at an aggregate level for Q1, Nifty, the entire pack seems to be, tilted towards the positive side, showing signs of recovery, not a full blown recovery, not a full blown revival, but green shoots of what could be the very, very nascent start of a series of earnings led rating upgrades.
Okay, okay. Nirav, what about the IT sector? I know that, there's a plenty of macro headwinds at play for the IT sector as well. But can the investors play it as a contra play or still it's a complete wait and watch situation?
See, at this point in time, it's not really a contra play also as much. While some may debate it to be a good value play, but that's again the jury's out there to decide whether it's indeed a value play or a value trap. IT remains to be under pressure, especially those where the top line is oriented and geared towards exports of services. We do not expect any near-term recovery on the top line as well as the margins on an immediate basis. So then, of course, from a medium to longer term perspective, assuming several assumptions and variables play out in favor of a stronger, robust global macro backdrop, and given that the stars aligned, we could see a recovery, but that's not coming in anytime soon. It could be a couple of quarters out from here that we start seeing the first set of signs. So the way we stand today, it does not seem very appealing, especially given the other set of opportunities available in the market and several other growth pockets. This may be a very difficult climb from here on. So best to be cautious here.
Best to be cautious on the IT sector. But Nirav, what about the new age stocks? So far this year, if you look at Zomato, Swiggy, all have delivered negative returns, even for the fact of matter for PTM as well. We have more new startups companies which is filing for IPOs, Physicswala, Meesho, all of them will be filing for their IPOs later in the year also, expected to. But anything that you are watching out for all of these counters, given that profitability is something that, is keeping investors away from these counters?
Correct. So the conventional metrics of valuation don't really hold much weight for some of these new age companies. It requires a very distinct perspective to understand, not just the current valuations, but the growth that one can expect in earnings, right? Finally, so the kind of hazy image in, bottom line metrics makes it very difficult to arrive at a terminal value and, run your conventional valuation metrics. But having said that, there are several opportunities still that look very good, even from the new age companies basket. Right, there are some solid businesses that are being run. Of course, they invest heavily into growth, which may not seem very healthy by conventional standards if one were to look at the P&L and the balance sheet. But with a longer term horizon, we expect these investments to return in return multifold earnings growth going ahead, and especially the ones geared towards consumption patterns, habit formation, and the entire discretionary spending universe. As the macros strengthen and consumption starts picking pace, we expect them to be in the first order of benefiting when it comes to top line growth. And of course, as we speak, most of these companies are generally very efficient with their operation, so we can expect at least sustainability of margins, if not expansion, going ahead.
Okay. Just one last question before we let you go, Nirav. The advanced decline ratio that has consistently remained above that one level for the past 4 months. What are your estimates for Nifty? Because everyone is talking about Nifty claiming its all-time high. But anything that you're watching out for, and of course, any targets that you're watching out for from a Nifty perspective?
So, from a target perspective, we are comfortable to view Nifty touch a newer all-time high before the calendar ends, right? And this could probably inch much closer to the 26,000 mark and beyond. But it could take some time, of course, and we still have 2 full quarters to go that would determine the tone, that is set. Also, there are several macro developments, but keeping aside these caveats, in line with our expectations, we expect Nifty to breach and create a newer all-time high at least once before the calendar year.
Once before the calendar year. All right, we'll be watching out for that. But with that, we have to let you go, and thank you so much for your time for joining us.
Thank you.
All right, let's take a quick check of the markets at this point of time. Well, we have recovered from the day's low, and Scientix is up about 170 points, and Nifty is also above that 25,500 mark. So yes, we have seen a smart recovery from the day's low levels as well. If you look at some of the sectoral indices, Bank Nifty has turned into and flipped it into the positive territory. Very volatile session, given that we have the expiry date today. So we are seeing a swings in the trade at this point of time. We'll watch out for the second half of the session also, whether there could be a sustainable recovery going ahead. But yes, from a sectoral perspective, the auto index seems to be doing quite well, nearly 1% gains that is coming in. Metal index, one of the top sectoral performers with about 0.5% gains, and of course we have Bank Nifty and FMCG. FMCG, however, seems to be flat in the red at this point of time, and Pharma index also with marginal set of gains. If you look at the broader end of the markets, small caps, mid caps, they seem to be mildly in the green with about 0.1% gain. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market was developed and how the stocks were in focus. Until then, signing off.